Good morning, my friends. How is everybody doing today on this early morning Wednesday, the 27th of 2024, August? I always like to just come up every morning and just make a little clip and post it on how my crazy mind works. And interesting enough, yesterday evening, upon doing some scouring and diving into the market, I found an extremely interesting chart. And it is the company Five Below on the NASDAQ. And if you don't know what Five Below is, it's just a store, okay? It's a store that is, I couldn't say if it was nationwide. I guess I could Google it, but I've been to a couple of their locations. They sell a little bit of everything, but I was surprised to see that it actually was a investable company. And sure enough, looking at the chart, this is a quarterly chart. Okay, this is really zoomed out now. This is really zoomed out. So right here you got 1, 2, 3, 4, 5, 6, 7, 8. You got about 8 years of price action here. Okay, so this is a zoomed out picture of what's been happening for the past 8 years. Okay, so 8 years ago in 2016, this thing was trading around anywhere between $25 and $45 down here. Okay, and now, where are we at now? We're at 82. Okay, but it had an all-time high of 237. Okay, so you have a range now. Your range, essentially, you could say, is $25 to $237. That's your whole range. And yet, here we are at $82. So if you were just to simply say, okay, what's the middle of this range? Okay, the middle of our range here would be, about the $110 mark, give or take. Okay, so right there, that's the middle of your range. The middle of your range is about here. So where we're sitting at right now, well, right now, in a zoomed out big picture, we are in the bottom half of the range. So this is where I tend to start buying up positions bit by bit. Okay, because I know I'm in the bottom half. So if I am of the understanding, I think, okay, this company is going to be around for a while. They're doing good. I like their business. I like their business model. I like their stores. And I'll be honest with you, I personally have been to these stores. I personally go to the store. And being that it may be, I have that little fundamental look in my mind of, okay, I have personal value of this company. I would like to invest in this company. So that's out of the way. So then now I come to the chart and I say, well, how's the chart look? Okay, I'm in the bottom half of a zoomed out range. Even better. More, how could you say? Another thing that's in my favor of what I'm looking for to start purchasing. Okay, so what do I do now? I zoom in a little bit. Okay, let me zoom into the monthly. Well, would you look at that? This is where I see beauty in this thing. Okay? It's because looking at the monthly here, this is a perfect example of what I like to call the round trip maneuver. Okay? Where we start somewhere and we end up right back where we started, because it plays everybody for the fool. During what, the past 3 years of price action, it has just been up, halfway down, up, down, back to the beginning. It has just fooled everybody. 3 years ago, it is like right back where it started. And oddly enough, it is just now hitting, at this moment, where we're at right now, it is hitting a classic, very simple demand zone right there. Okay, so you have another thing in my bag that says, okay, this actually is what I'm looking for to buy. It's in the bottom half of a very zoomed out range. Okay, I'm hitting a demand on the monthly. I'm starting to make a little bullish candle here. Okay, there's nothing wrong with me starting to get in on this. Going back to the very zoomed out picture, okay, when I look at the quarterly, what we were just looking at before, the zoomed out picture, another key interest that I have in my favor you see that? Look at that quarterly trend. That is a high time frame Big Mac Daddy right there. Okay? So long as we hold this trend and don't break below $50, I'm in. I'm in on this stock until we break that $50 level. Because that $50 level is going to tell to me, okay, we took out our previous low. So we've just made a legitimate lower low on our quarterly market structure. And it's going to negate my idea of us so we have this bottom trend and we have what could be the start of the top of our trend. So this one is looking very juicy to me right now, because as far as I'm concerned, if so long as it doesn't break $50 and I'm getting in, and I'm starting to get in now, there's no reason why we can't go test the top of that trend. Okay? Which would be somewhere around 160. So I would be buying 80, 70, 60, and I would be selling 150, 160, 150, 160, 145. That's generally how I would play out my setup on this. And this one is looking very interesting. Very interesting. This is a beautiful idea that we're coming to here. And zooming in a little more on the weekly, well, okay, we had a huge downturn, and now it seems like we're starting to make a move up. Have we made any higher high on the weekly? No. But we are moving up. Okay. On the daily, how we look? Okay. So zooming in even more on the daily, you do have a couple points of interest. You have a slight gap below us, okay, at the $70 area. So that's what, you don't know what it's going to do. You never know. It could collapse from here and go to $1. But I've already told you my level where I'm out. At under 50, I'm out. I don't care. It's negated my plan. So long as we stay above 50, I'm going to have orders at 60, 65. My first order is going to be here at 70. We're going to take a little nibble today, okay, because a lot of times price just likes to move on without you. So I know I'm getting filled with at least one position. You have to split up your entries. Personally, I don't like to go all in at one moment. I like to balance out my entries. One, so I know I get filled, and two, so I'm being selective in the prices I can get in. I'm giving myself the benefit that if it does go lower, I can just get in at a better price because I still have cash on the side. I didn't buy all in at $80. Okay. And looky here, interesting enough, on the daily, gap above and another gap over here. There's no reason why the formulation of our idea here cannot come to fruition. That's why sometimes when you zoom out and then you kind of go in, you can really kind of formulate a plan and think about, this is how I approach the market. So for me, 5 below, it's simple. We're getting in at these levels below the bottom, at the bottom of our bottom half of our very big range, and we're going to be selling in the top half of our range. We're going to be selling at a test of that trend line that we've drawn on the quarterly time frame. And yes, it's going to take time. This is not going to be a let's enter this and it's going to go to where we want tomorrow. But this is a solid setup that I have kind of diagnosed. This is generally how I approach the market. You want to look at different time frames, and you want to have an invalidation point. You've got to have that. Man, I am telling you, if your trading setup does not have an invalidation point, okay, then you might need to rethink it, because you're going to let it keep going against you. You have to have a point where okay, well, my idea was wrong. And as long as your idea is right, you have to stick with it to see it through. Whether you win or not, you have to stick with it to see it through. So you can get that experience under your belt to know, okay, that setup, well, it didn't work that time. I'll give that setup a few more chances to see if it's working or if I need to retweak my system, so to speak. Because you don't want to keep changing your system over and over and over again just because it didn't work out one time. That just might not have been that particular thing that you were investing in might not have been akin to your setup. Other things might have. Just because, say this 5 below, say it doesn't do this, okay, and it does something completely different on the game plan. Does that mean that I'm not going to take this same setup on something else? No, I will take the same setup on something else because I have seen this setup happen before. That's why experience is key. Because just because it doesn't happen on this company doesn't mean that, let's say on Coca-Cola, say Coca-Cola has the exact same looking chart, but on Coca-Cola it does what we had thought 5 below was going to do. Well, that means that our ideas and our setup and our trading plan and our system is good. It just didn't work on 5 below, you know. It worked on the other one. And over time, you'll see that, okay, well, no, I've seen this play out more times than not, so I'm going to go ahead and take this. That is trading. It's having all these things in your belt over time and developing that third eye, so to speak. I don't know. I've talked before about intuition and systems, and some people, they have these rigid logical systems, and some people, they just use bots to trade for them. They set up parameters, and then they just let the algorithm bot trade for them that they've developed. And other people, they are solely intuition. You know, they go by the seat of their pants, how they feel that day. And both of them can be right, and both of them can be wrong. That's how crazy it is, you know. But by having a balance of the two, you can become a force to be reckoned with in these markets. Do not throw intuition out the window. Because intuition, to me, a lot of intuition just comes from experience. Okay? When you see the masters of the game, it could be the juiciest looking setup, but when you see them sometimes just hesitate and go, I'm not really feeling this right now, that's the intuition speaking to them. That's the experience speaking to them. Something that they're not clearly seeing, but their third eye is seeing, is telling them, okay, something's amiss here, but it's just not registering to me immediately, you know. And intuition can be a positive thing too, you know. I'm not really seeing the particular good setup here, but, you know, something is coming to me that this could be a particularly good trade, so to speak. You know, I had one of those recently. So that's generally how I'm looking at it. As far as 5 below, especially when I zoom out more, you know, I like the way it's looking. I like how on the monthly we've hit that demand zone. If it starts moving away, then that's a solid demand zone play right there. Okay, because it had just tapped it once and it's moving away. That's what you want. You don't want it, right now we don't want it to come back down and play with that area. Why? Because that means it wasn't a tap. That means they're going to really dance with it and mutilate it and consolidate there and play games. We don't play games. We want to go down there, punish the buyers. The buyers are getting punished at that area, and then we want to buy when the buyers are getting punished so the price can move up and away without them because they sold at a loss. That's exactly how we're playing 5 below. I love everybody. I hope you found this a little interesting on our 5 below idea. And we will talk to everybody on the next one. See ya.